Hi everyone, this is Rob Roy of Elliott Wave Options, and in this edition of our Pro Trader Tips, we're going to feature our case study 993, which was a call debit spread in our impulse strategy at ewotrader.com, which is now infused with AI, makes it even that much more accurate. It was on stock GWW. So a few things that I want to go through with you here. First of all, the entry alert was sent out to our alert subscribers on January 31st, as you can see. And here's the chart. When we take a look at this chart, you can see that we're clearly in a wave three, my favorite wave of Elliott wave to trade. But we'd gone just a little bit vertical and then got a pullback, which was a good entry. So we had an ascending triangle pattern with the breakout. That likely continues. Now, a couple things here. We've got an earnings report on the horizon, and we've got a high dollar stock. Oftentimes in the directional strategy, we're just looking to buy straight long calls. However, when you have a situation like this, you want a little bit of protection against the earnings report. So when you have a high dollar stock as well, you can set up a spread. So we set up a 20-point spread. You can see we bought the April 980 call and sold the April 1000 strike call. So it was a 20-point wide spread. You're going to give it some room to roam when you have a high dollar stock like this. And it worked out extremely well. As you can see, the return was roughly 40% in 0 days. And if you're wondering, well, how can you have a return in 0 days? That means that the entry alert and the exit alert were less than 24 hours apart. So it was a real quick trade. Another example of the fact that you can generate nice returns with spreads. You don't have to have just straight options. So if you want that little added protection, you can. So going into earnings, the stock turned around and popped up again. So you can see this nice big move here in just the 1 day. And with that, the problem was the ADX went up, telling you that the strength was there, but the positive directional indicator went down. And the positive directional indicator is more responsive to day-to-day moves. The ADX is a little bit more of a lagging indicator. So when they separate like that, and then we have the ADX breaking that much above 40, that elicits some caution, on top of the fact that one of our profit exits, oftentimes we're talking about technical targets, but when you have a profit exit, if we can get 35% in less than 3 days, I'm going to take that regardless of the chart. So in this case, even though we put on a call vertical debit spread, we were able to generate 40% in less than 24 hours. So I hope you found that informative and look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.